Bitcoin is getting very close to all-time highs, and I thought this would be a great time to remind you that it's still super early for Bitcoin and the bull run has barely even started. So many people are reaching out to their friends who have Bitcoin asking questions like, is now a good time to invest? Bro, should I wait for a pullback? Do you think we'll dump at 20K and I can buy back lower? Relax. The reality is, you're probably a terrible trader just like me and have absolutely no business trying to time the market and trade Bitcoin. With that being said, let's talk about the 5 reasons why it's still early for Bitcoin. Reason number 1 why it's still early for Bitcoin. Google Trends for the Bitcoin search term are still very low. We're at levels not seen since early to mid 2017 before the last bull market. There's been a slight uptick in the last few weeks, which makes sense since the price has been going up and the FOMO has been kicking in. If Bitcoin is this close to all-time highs and nobody is Googling Bitcoin, at what price are they going to start Googling Bitcoin? 20K? 50K? 100K? At a price of $50,000 per coin, Bitcoin reaches the huge milestone of $1 trillion market cap and joins the likes of Apple, Google, and Amazon. Mainstream coverage of Bitcoin typically doesn't come until it starts making new all-time highs, which might be right around the corner. I don't expect to see the Google Trends to pick up until CNBC is shilling altcoins, DeFi tokens, and other garbage crypto portfolios. Once Bitcoin is safely back above the all-time high of 20K, it'll start making headlines again. Remember the article in the New York Times, "Everyone is getting hilariously rich and you're not"? Well, that called the top of the altcoin and Bitcoin bubble. It had a picture of 2 guys at a Bitcoin meetup wearing holiday-themed Bitcoin and Ethereum sweaters. We are not even close to that level of FOMO. Reason number 2 why it is still early for Bitcoin is that confidently breaking above the prior all-time highs can take time. Each bull run has multiple 25% plus pullbacks before coming to an abrupt end. A recent report from Fundstrat shows that it took over 4 months and 2 25% pullbacks to finally break the $1,200 all-time high that was set in 2013 and consistently remain above it. The first pullback was in the summer of 2016, right after the halving, dropping from $775 down to the $460 range. The second pullback was that first attempt back at the all-time highs, dropping 34% from $1,200 all the way back down to $750. The third pullback was the second attempt at the all-time high, then pulling back another 29%. At this point in the cycle, it looks like Bitcoin is just making its first attempts back at the $20,000 all-time high that was set in 2017. There were 2 more huge pullbacks to finish the 2017 bull run, 38% in June, 40% in September, and then the final crash coming in December of 2017. If you count the March crash of 2020 as the first big pullback of a bull run, that means there are probably still a few more pullback and subsequent 100% advances before this bull run is officially over. Reason number 3 why it's still early for Bitcoin is that billionaires are just now starting to invest in Bitcoin. In the past few months, we've seen world-class investors and actual billionaires publicly open up about their Bitcoin investments. It's important to note that these are elite investors, the top 1% of the 1%. These guys are usually years ahead of the competition. Even world-class investors like Ray Dalio, who recently admitted he might be missing something about Bitcoin, doesn't understand it. Now, if Ray Dalio doesn't understand Bitcoin yet, then it's safe to assume the majority of the investment community isn't taking it seriously. Paul Tudor Jones, legendary macro investor and hedge fund manager, announced in May that he had put almost 2% of his net worth into Bitcoin. Paul Tudor Jones is worth almost $6 billion, and I'm guessing he has anywhere between 5,000 and 6,000 coins valued at around $100 million. The other benefit of Paul Tudor Jones talking positively about Bitcoin is that it takes away some of the career risk for investment professionals. Right now, in 2020, it's still pretty uncomfortable bringing up Bitcoin in a professional setting, let alone an investment professional to recommend Bitcoin to their clients. When enough billionaires and celebrities are shilling Bitcoin to their friends and followers, investment professionals will have no problem or face any roadblocks preventing them from selling Bitcoin to their clients. Another legendary investor who's come out positively about Bitcoin is none other than Raoul Pal, macro investor and founder of Real Vision. And he continues to say that he is irresponsibly long on Bitcoin and has even hinted that his Bitcoin exposure may be close to 50% of his net worth. Not only has Raoul Pal put his money where his mouth is, but he also launched a crypto-focused channel under the Real Vision brand to provide high-quality content to current Real Vision subscribers and hopefully attract new customers who are already Bitcoiners. The next billionaire on the list is Michael Saylor, aka Giga Chad, aka Bitcoin Rookie of the Year, and CEO of business intelligence firm MicroStrategy. Michael Saylor sent shockwaves throughout the industry this year when he and his company announced that they would be adopting a new Treasury Reserve policy that enabled the firm to buy $425 million worth of Bitcoin and has made that their reserve asset. MicroStrategy was the first publicly traded company to announce that they were holding Bitcoin on their balance sheet, and Square quickly followed up with a $50 million Bitcoin purchase of their own. As bullish as this news is, there are still thousands of publicly traded companies with trillions of dollars in cash sitting on their balance sheet that have yet to buy Bitcoin. While it makes sense that tech giants like Facebook, Apple, and Google will probably hold Bitcoin on their balance sheet, I'm not confident that they will be doing that in 2021. It's going to take another cycle before public companies can get more comfortable with the current volatility of Bitcoin and holding it on their balance sheet. Reason number 4 why it's still early for Bitcoin is that many on-chain metrics and indicators are still not in peak euphoria territory. One indicator is the MVRV ratio. In simple terms, the MVRV ratio tracks the total valuation of Bitcoin versus the cost basis of everyone who's bought Bitcoin in the past. The MVRV ratio was developed by Murad Mammadov and David Poole and is calculated by dividing the network value or market cap of Bitcoin by the realized cap. Now, the network value or market cap is pretty straightforward. It's the total number of coins in circulation multiplied by the current price of Bitcoin. The realized cap was developed by Nick Carter and the Coinmetrics teams, and this approximates the value of all Bitcoins based on the last time they moved. When you divide the market cap by the realized cap, it gives you a good sense of what a fair value for Bitcoin might be. And some traders are going to attempt to use this to time the market tops and bottoms. During the 2017 bull run, the MVRV ratio hit an unbelievable 3.96, meaning that the market cap of Bitcoin was 4 times larger than the realized cap. By December 2017, many investors were so far in the green that buyers were finally exhausted and the sellers took over. The MVRV ratio will be an interesting indicator to watch during the next bull run. And reason number 5 why it is still early for Bitcoin is because you can never really be late to Bitcoin. The majority of people still have no clue what Bitcoin is. At this point in 2020, almost everyone has at least heard of Bitcoin. But most people don't know enough about it to have a strong opinion one way or the other. As Bitcoin becomes more recognized as an emerging store of value, like a digital gold, it becomes easier for the average person to understand that it's a long-term play. Because once someone new starts getting into Bitcoin, it inevitably leads to them becoming a long-term hodler. But even if you did buy at the absolute top of the last bubble, all you had to do was buy $50 worth of Bitcoin each week for the next 3 years, and you would be up almost 50% on your investment and would have accumulated more than 1 Bitcoin during that time, all for about $8,000. So many people from the 2017 bull run never logged back into the exchange after the bubble burst, and I don't blame them. But the hodlers who went deep down the rabbit hole during the bear market are now hardened and have become new hodlers of last resort. The hodler mindset isn't about never selling, it's about moving to a Bitcoin standard where you're dollar cost averaging and stacking sats on a consistent basis. Swan Bitcoin brilliantly realized this and built an entire business around recurring Bitcoin purchases on a daily, weekly, or monthly basis. I like this strategy because it feels very similar to investing in a 401k or a long-term savings account. It's a one-time sale, set it and forget it, hodl your Bitcoin for the long term. These are the 5 reasons why I think it is still early for Bitcoin and will always be early for Bitcoin. Becoming a Bitcoiner is a mindset. Set it and forget it, stack your sats, and think long term. Let us know what you think about this show in the comments below. Keep Bitcoining, and I'll see you next time.